Good morning. My name's Ryan Littlestone from forexflow.live. Going to start this week with a pretty simple trading strategy going on, and we're going to look at the Aussie dollar versus the US dollar chart and the 4-hour chart. Now, a lot of times I come in these videos and we talk about the fundamentals and what's going on in the world or for a particular country or central bank. But sometimes trading just is as simple as watching a chart and a couple of levels and trading in between a well-defined range. And the Aussie dollar has one of those in particular where it's been trading between the sort of 76, 77 level and the 78 level pretty frequently, and the levels are being respected. Now, if we look at the chart here, I've marked the two main boundaries in red there, down towards 76.90 and 74.15, which sort of mark the real edges of the range here. In between those, we've got two sort of smaller areas into 77 even and into 78 even. So it's a bit of a little area there, sort of 10, 15 pips either side. And trading between these ranges at the moment is proving very profitable. I've been trading longs a couple of times now off the 77 area down to 76.90s. You know, cutting the trade out as it rallies back up through 77. The last trade I did was on Friday just in the 76.90s. The last cut I did was at 77.70s. So it's a nice range to play. Now, we do get the odd break here or there, and that's got to be factored in. You can see previously that we had a big break above 78 all the way up to nearly to 79. So what you can do with these sorts of trades is look for these break points. If they happen, stick a buy stop in above to reverse the trade if you're short up top. Go with a buy stop to potentially catch a break higher. Again, you can keep those fairly tight. If you go for a break trade on the top side, say around 78.20 odd, you can have a stop fairly tight just under that, that 76, that 77.90 odd level. That means you don't give too much. If it's a false break and it comes back down in, then perhaps you can look to see if the level holds once again, it becomes resistance at that zone, and then you can try the shorts again, looking for a move lower. And what's interesting about this chart at the moment is the downside. We had a minor break a week or so ago on Janet Yellen coming out and saying that the Fed may need to raise rates. That caused a little bit of a wobble in dollar pairs. We saw that break under down into the 76.70s. But it was a very fast move and it quickly reversed. I actually got knocked out of a long in a trade I was in then, but I got back into it quickly in the 76.90s, ran it all the way up to 78. So, but this level is proven a bit more of a tougher nut, as we can see, than above at 78. So what you can look to do here is look again for a sell stop underneath. If you're long into that area, look for a reverse on your stop into a short round about maybe 76.80. If you do get a decent breakdown, then you're going to run with it and see how far it goes. Conversely, you can keep it again very tight. Anything above sort of 77, 77.10, you're wrong. You've only lost a few pips on the trade, and then you see what happens after that. So as I say, no great fundamental story here at the moment. It's basically trading between two numbers. We know what's going on with the fundamentals. You've got China on one side, the virus on the other side, what's happening in the US dollar on another side. So all those things are still factoring. But in the meantime, looking at a pair its simplest form, just trading the range and see what happens, and keeping your trades nice and tight. So a fairly straightforward one to start this week off. And as always, I wish you luck with your trading.